We have one final trader to get to on our show. Joining us for that is Mike Patton, the head trader at Thunder Trading. Mike, tell us about your pick.
Well, for today, I have S&P Global Incorporated. The symbol is SPGI. Now, a lot of you may have never heard of this stock, but this is the company that's behind the S&P 500 index and all sorts of other financial products. So they actually have over nearly 40,000 employees. They're based out of New York. And right now, it looks like their stock is probably at a good value point, currently trading around $514 a share. But I do see potential upside there that's significant. Looking at the chart right now, the stock has been recently moving up. I do think it probably will get some degree of a pullback if the markets continue to come down. But at the moment, it looks like the buy point for the stock should be somewhere between $500 to $515 a share, somewhere in that $15 price range. So looking at the opportunity, I do see potential upside to anywhere from $549 to $575 on the highest end. That should be within the next 6 months or so. I do expect that they'll probably benefit somewhat if we get more market volatility, since you'll get more trading activity typically when that happens. So usually people will look more at data and services at that time, but we'll see. But that looks like a possibility. However, if the stock, for where it is now, if we start to trade significantly below 500, I would say down to maybe 485 or so, that would be where I would be convinced that the momentum is no longer there. So if it gets down to like 485 or so, probably it's time to get out. Otherwise, as long as it stays near where it's at, which looks like it will, I do see at least a minimum of a $30 to $40 potential upside from where we are now.
I like that you have found a way that you can take advantage of the volatility in the stock market, especially since September trading can get wild.
You know, like for example, Robinhood did really well during the pandemic with all the volatility, et cetera. And then of course, people starting to come on the platform and getting into stocks. So some companies do well when there's volatility, and usually they're focused on the markets. Usually their fees from all the transactions, like for example, CBOE fees will usually go, the revenues will be higher because they're collecting all the fees from all the trades that are going on. But in this case, S&P Global doesn't collect fees from trades, but they do provide an obviously valuable resource, which is the S&P 500 index itself, as well as many other related products. So I do think that they will likely do well as we continue to navigate the changing economic picture in the country.
Have a great trading week. Thank you, Mike.
No problem.
Let's go to businessfirstam.com for where to see our show on TV.